Right now, as we watch the tape, Applied Digital Corp is trading at exactly $23.54. That represents a push to the upside of 70 cents, translating to a 3.06% gain on the session so far. When you look at a move like that in real time, especially in a market environment that has been oscillating between fear and greed, it is easy to get swept up in the green percentage and assume this is just another day of standard volatility. But if you look closer at the intraday price action, something more specific is happening. The stock didn't just drift to this level, it fought its way there. We are seeing a distinct battle between the profit takers who have been riding this name for the last few months and a new wave of accumulation that seems to be betting on a structural shift in the company's valuation. The volume accompanying this 3% move is telling us that this isn't just retail traders chasing momentum on their phones. There is a density to the buying pressure that suggests conviction. The expectation for Applied Digital, or APLD as many of you know it, is often quite binary. The general consensus, especially among those who haven't looked at the filings in a while, is that this is a tangential play on the cryptocurrency mining world, a stock that rises and falls with the price of Bitcoin, effectively a leveraged beta trade that you buy when crypto is hot and sell when it cools off. That is the expectation. The reality, however, is significantly more complex and far more interesting. The market is slowly waking up to the fact that Applied Digital is arguably less about mining coins and more about solving the single biggest bottleneck in the technology sector today, the scarcity of power and ready-to-deploy infrastructure for high-performance computing. While the crowd is watching the price of digital assets to determine where this stock goes, the smart money is looking at utility capacity, transformer lead times, and data center interconnects. This creates a massive disconnect between what the casual observer sees, a volatile small-cap tech stock, and what is actually happening, which is the build-out of critical infrastructure for the AI age. When you analyze the trading behavior we are seeing today at that $23.54 level, you have to consider the broader context of the semiconductor and infrastructure trade. Think about the massive rallies we have seen in names like NVIDIA stock, or even the resilience in Tesla stock. These movements are predicated on the idea that compute power is the new oil. But here is the catch that rarely gets discussed in the mainstream headlines. Having the fastest chips in the world means absolutely nothing if you do not have a place to plug them in. This is where Applied Digital enters the conversation, not as a speculative play, but as a solution to a physical problem. The 3% gain we are seeing today is likely a reflection of capital rotating out of the purely theoretical AI plays and into the hardware and infrastructure names that actually facilitate the processing. It is a rotation from software promises to hardware reality. If you were to open your Interactive Brokers trading platform right now and pull up the Level 2 quotes, you would likely see a stacking of bid orders that suggest institutional support is building higher floors. In the past, this stock might have given back these intraday gains by the lunch hour, fading as day traders took their quick profits. Today, the price is holding. It is consolidating at these higher levels, which is a classic technical signal of strength. It implies that for every seller looking to cash out, there is a buyer stepping in, likely with a longer time horizon. This is the kind of price action that separates a pump from a trend. It is vital to understand that when you engage in online investing, specifically with companies in this transition phase, you are not just buying a ticker, you are buying a management team's ability to execute a pivot. Applied Digital is in the middle of pivoting from a crypto-centric model to a high-performance computing model, and the market is trying to figure out exactly what that is worth. Let's take a step back and look at the sector momentum. The data center space is currently one of the most constrained real estate markets on Earth. We are not talking about office buildings or strip malls. We are talking about specialized facilities with massive power access. This is why you see people discussing these trends on Fidelity Investments forums or within the communities surrounding SoFi stocks. The retail investor is starting to realize that the cloud isn't just some ethereal concept. It is a physical place that consumes gigawatts of power. Applied Digital's value proposition hinges on its ability to secure that power and build the shell around it faster than the competition. When we see the stock up over 3% today, it's a vote of confidence that they are hitting their construction milestones. If they were missing deadlines or losing power contracts, this stock would likely be red regardless of what the broader market is doing. Now consider the volume. Volume is the fuel that drives the engine of price. Without volume, a price move is like a car running on fumes. It won't get far. Today's volume profile on Applied Digital is robust. It suggests that the liquidity is there. This is important for those of you who might be using Schwab Intelligent Portfolios or managing an individual brokerage account where risk management is key. High volume on an up day validates the move. It means that big blocks of shares are changing hands without crushing the price. If this was a low volume drift higher, I would be warning you to be careful of a trap. But when the volume confirms the price, it creates a positive feedback loop. Traders see the activity, algorithms pick up on the increased relative volume, and it attracts more eyes to the setup. This brings us to the psychological aspect of holding a stock like this. It is not for the faint of heart. If you are used to the stability of a blue-chip dividend pair, looking at the daily swings of APLD might give you vertigo. However, in the world of self-investing, volatility is often the price you pay for performance. The tension here is between the fear of the company's debt load, because building data centers is incredibly expensive, and the greed driven by the potential revenue per rack in an AI-driven world. The bears will point to the balance sheet and say they are burning cash too fast. The bulls will point to the backlog of demand for HPC hosting and say the revenue is guaranteed once the doors open. That tug of war is exactly what plays out every single day in the order book. Today, at 23.54, the bulls are winning that argument. Speaking of holding through volatility, I want to pause for a second and hear from you guys. Comment below how many shares of Applied Digital you currently hold, or if you are watching from the sidelines, tell me what price point would make you finally pull the trigger. I'm curious to see where your heads are at with this valuation. Moving deeper into the mechanics of the move, we have to talk about the correlation with the broader tech sector. Often stocks like Applied Digital are coupled tightly with the NASDAQ performance. If the QQQ is down, APLD is usually down more. If the QQQ is up, APLD flies. But recently, we have started to see periods of decoupling. There are days where big tech is flat and APLD is moving on its own specific news or sector dynamics. This is a sign of maturity in the asset. It means investors are starting to treat it as an individual business rather than just a high beta proxy for the tech sector. If you are using a tool like the Fidelity mobile app to track your correlations, you might notice this drift. It is subtle, but it is there. It suggests that the market is beginning to price in the specific execution risks and rewards of Applied Digital itself, rather than just macro sentiment. We also need to address the AI hype narrative. It is easy to dismiss every company that mentions artificial intelligence as riding a wave. And let's be honest, many of them are. But there is a difference between a company that slaps AI in its press release and a company that is literally pouring concrete to house the H100s that train the models. Applied Digital falls into the latter category. They are the picks and shovels of this gold rush. When you look at the soaring prices of NVIDIA stock, you have to ask yourself, where are those chips going? They aren't going into a standard office server closet. They require liquid cooling, high-density power, and specialized racking. Applied Digital is building the next-generation facilities designed specifically for this thermal profile. That is a tangible, physical moat. It is much harder to replicate a 100-megawatt facility in North Dakota than it is to code a wrapper for ChatGPT. Let's break down the business model for those who might be new to the name. Applied Digital essentially operates differently than your traditional co-location provider. Historically, they focused heavily on hosting blockchain mining equipment, which requires cheap power, but not necessarily high redundancy or uptime. If a miner goes offline for an hour, it's annoying, but not catastrophic. However, as they pivot to what they call Psi Computing, their HPC division, the requirements change. AI workloads need massive uptime, better cooling, and lower latency. This transition requires capital. It requires upgrading infrastructure. This is why you see them raising capital, issuing debt, or doing shelf offerings. For an investor using SoFi Invest or browsing through Robinhood cash management options to find growth, this cash burn can be scary. But you have to look at the return on invested capital. The rates they can charge for HPC hosting are significantly higher than what they get for crypto hosting. The margin profile transforms as the business mix shifts. The market skepticism and the reason the stock isn't trading at $50 already is largely due to execution risk. Can they build these facilities fast enough? Can they secure the financing without diluting shareholders into oblivion? And can they keep the power on? These are the questions that keep the short sellers interested. And make no mistake, there is a short interest in this name.